Hello and welcome to the XQ CPA channel, where we share with you the latest and greatest tax tips and business news. Did you know that there are less than 3 weeks to pay and file your 2023 taxes? This is both for individuals filing their 1040 tax return and C corporations filing an 1120. As a CPA firm, we see many mistakes a taxpayer can make when tax season comes around. Today, we will detail several and how you can avoid them so your tax return can be accurate and your tax position optimized. Mistake 1. No CPA. Many people try to minimize their tax preparation expenses by using free tax services, like TurboTax. There are 2 pitfalls to this practice. 1. For many people, free tax services are false advertising. Unless you have a very basic tax return, these services will charge you potentially hundreds of dollars in extra fees you are not informed of when you signed up. On top of this predatory advertising, we see clients come to us for help because their previous free tax preparer made several mistakes, leaving them at the mercy of the IRS.
Hello, my name is Charlene. Today I want to talk to you about some of the most common mistakes that we have seen for people who use TurboTax or other free software. So the first place is at rental properties. For business owners who have rental properties, they thought that it's an easy thing, so they just have to fill out the information using the free tax software. However, the most common mistake is that rental properties are supposed to be depreciated across 27.5 years, and a lot of time when they are preparing their own tax return, they omit these depreciation charges, which could be detrimental because it increases their tax liability. The other scenario is that if you're an independent contractor, oftentimes what we see is some of those deductions that you're supposed to claim, but you omit them because you don't know you're eligible for those deductions, such as auto deductions, home office deductions, any business expenses that you paid out of pocket.
Avoid this situation by doing your research for a good CPA. We are not all the same, so make sure you find the right one for your specific tax needs. Mistake 2. Not knowing how to work with your CPA. You've done the right thing and found a CPA to help you with your taxes. Now what? You may just drop off your income documents, but that is not enough for a good CPA to prepare your tax return with your ideal tax position in mind.
In this process of looking for a CPA, it's very important that you ask the question of what's the definition of a good CPA. Now, a good CPA really should take the time to review the tax return with you. Now, we firmly believe that in order to produce a good, accurate tax return that optimizes your tax position, you should always stay compliant, but there are a few steps that need to be followed. Now, if you're interested to find out more, please watch the XQ CPA methodology. The first thing that's very important is always, when you work with a good CPA, they will structure the information or help you structure the information by giving you an organizer. I know it can be daunting. You look at the organizer and there are several pages and you just feel like you don't have the time. But it is equivalent to you go see a doctor the very first time and they give you all these forms and you have to fill out because they need to know your histories.
Communicate. A good CPA will work with you to understand which deductions and credits you wish to take and will inform you of the documentation needed to substantiate them. Remember, substantiation is key. If it cannot be proven that you incurred certain expenses or drove certain miles for business purposes, you are better off not claiming the deduction. For example, if you wish to claim business mileage but do not communicate this to your CPA and do not provide a mileage log, your CPA cannot add this deduction to your tax return.
There might be also benefit to conducting a variance analysis. What is a variance analysis? You take a look at your tax position for the current year and you analyze and compare it with the previous year, and if there's any fluctuation, any changes in income or deductions, questions should be asked so that you make sure that you don't underreport your income and you don't underreport your expenses.
Trust your CPA. We are not IRS auditors. Our mission is to help you so your tax return can be accurate. Be transparent. Even over-communicate, so we have all complete information from you to help us help you reduce your tax burden.
So this is a very important point that is often neglected when someone works with a CPA. You need to sign your own tax return. Remember, your CPA cannot file your tax return until and unless you have signed the tax return. What that means to you is that before you sign the tax return, you need to understand your tax return.
Mistake 3. Lack of tax planning. It is not uncommon for people to wait until the last minute to prepare their taxes. Unfortunately, this scenario makes it difficult for your tax position to be as beneficial for you as possible. You may want to claim several deductions, but you did not perform diligent documentation throughout the year. Or it's the night before April 15th and you realize you have prepared your tax return under the wrong filing status. Or even worse, you finished your tax return and end up with thousands of dollars of taxes owed to the IRS. All of this could have been avoided with proactive tax planning. Tax planning is the process of analyzing your current tax position and implementing various strategies to minimize your taxable income, maximize credits, and avoid a heavy tax burden, all while ensuring your compliance with the IRS. Yes, tax planning and tax avoidance is legal. A good CPA will never encourage you to evade your tax obligation and swindle the IRS.
The last point is a very common question that I always get. During tax season, I always have prospective clients or new clients calling me and they tell me, Charlene, so-and-so told me that if I come to you, I will pay minimal taxes. Can you make my tax liability go away? The answer is no. I am a CPA, but I'm not a magician. I don't have a magic wand to make your tax balance disappear. However, the best advice I can give you is if you own a business, you're a taxpayer, you're high income earners, or you are entrepreneur, what you should do is that in order to avoid a tax situation where you have to pay high tax bills, you should implement proactive tax planning. So if you don't want to pay those high tax bills, it is too late if you start asking these questions come April 15. You should be asking those questions throughout the year.
If you need guidance to start your tax planning journey, XQCPA has the solution. With our ebook, How to Grow Your Wealth Through Tax Planning, you will learn the techniques used by tax professionals to reduce your tax burden significantly. Available exclusively on the XQCPA website. By avoiding these mistakes and working closely with the CPA, your 2023 tax return can be completed correctly and on time. If you need more guidance, we are here for you. Reach out to the XQCPA team by phone or online using the link in the description, or by visiting the XQCPA website. We hope you enjoyed today's video. As always, we will appreciate it if you like, share, and subscribe to our channel for more tax tips as we approach the April 15th deadline. We will see you in the next video. Goodbye.